What's up, everybody? Dave Bartosiak here, and I have a chart of the day. I'm going to give you a little kiss. That's right, a little kiss of Hershey's. Ticker HSY. Check out these lows, right? $1.10 has a huge surge up close to 280. That is a monumental move for a stock like Hershey's, especially considering those pre-COVID highs were down at like $1.60. So huge move higher. Then what happened? A little bit of negativity. Stock topped out, came under pressure. We get our real bearish action where it dips under that 50-day and fails. When you see the dip under the 50-day, the retrace to the 50-day and selling there, that is like the death knell, right, for a stock. A lot of people talk about this like the death cross, right? Or on the flip side, the golden cross, when that 50-day cross is up over that 200-day. I've always been, I feel like it's less of the moving averages crossing over each other and more of what does the stock do as it's approaching these moving averages, right? So this to me is just like something that happens mathematically. That's going to happen when you're in a downtrend or when you're at the start of an uptrend, like it's just going to happen. And it's not really that predictable, or the predictability on that's not so good. But when you get these failures and the retrace and that fails, the retest and that fails, that's when you start to notice things like, okay, maybe this isn't so hot, right? We have this failure at the 50-day, another failure at the 50-day, and then it got choppy. It kind of looked like we were okay, and then it fails again. And now we're just chop city. You get that chop city, and then you establish this trading range. We're trying to peak up above like 205, even yesterday. So you got a Mondelez. So Mondelez approached Hershey yet again. They approached them in 2016. They were thwarted by the board. Want to take them on over. So Hershey's popped yesterday. Could still pop here a little bit on some of this momentum with that, but it's down today. You know, I've talked about, this being a long-term play when it was down here in this range, given the moves that it's made. But granted, they're facing headwinds, right? They're facing some backlash from consumers in general that are trying to just avoid more sugary products. You've got increased costs in cocoa, which have really put the stock under pressure. When your main input price is up so high, that's really what the problem is in Hershey's, right? But now, what do you got? You got a stock that's about to get bought out. Maybe they're trying to fight it off. While I used to be a bigger fan of this, right, hoping that we're going to get a comeback as those cocoa prices sort of reel in, as cocoa prices had rolled over. Now, I think it's time to start looking at greener pastures and take a look at something else. So if it gets bought out by Mondelez, it's a whole other story. But for now, for me, from a technical perspective, we got this sort of sideways action, chopping up and down right by this 200-day. There's nothing there for me, so I'm looking elsewhere. That is Hershey. All right, folks, that's all I have today for my chart of the day. Be sure to follow the author if you're here on Zacks.com. It gets me all the brownie points in the world. Don't you want me to have brownie points? Subscribe to the YouTube channel, Twitter @Bartosiastics, and come back tomorrow because I'll have another chart of the day for you then. For everybody here at Zacks, I want to say thanks. See you then.